Morning, market chameleons, and soon to appear my favorite chameleon, Dimitri Pargamonik. How you doing, Dima?
Good morning, Will. How are you?
Excellent. Let's get started with the disclaimer right away. We are sharing that, so you can get right on.
Yep. So, everyone, good morning. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, call your broker. That's what they're there for, to help answer your questions and provide you with guidance. There's the disclaimer.
Excellent. So a little Q&A today, correct?
Yeah, I think we're going to do some Q&A today. I've been getting some questions, email questions over the weekend. Some people actually, asked me, how can they ask questions on the morning show? I told them, there are a couple ways to do it. You could put your question in the live chat on YouTube. Will's monitoring them. He'll read them back to me. Or you could click on a link that Will also puts in that chat that will take you over to Zoom. When you're in Zoom, you could raise your hand. Will sees that. He'll turn it on so we could hear your voice. You don't have to turn on your video camera if you don't want, but this way you could ask us the question directly and let us know any of the surrounding circumstances, or point us to where you're looking at. So let's see, if some questions come in today, just because, I've been getting them over the weekend. I decided let's do a Q&A today. Sound good?
Perfect.
I'm going to share my screen real quick. We'll just get started looking at the pre-market report. I do have some default questions, that I write down that come over either email, through the chat, through previous shows. So while we're waiting to queue them up, maybe we'll just start out with those. So let's begin with the pre-market report. So these are stocks trading in a pre-market hours. We have the most active stocks, biggest percentage gainers, biggest percentage decliners. Here I see so far 113 made our percentage gainers list, 62 in a percentage decliners. So from that perspective, looks like a little bit more bullish bias at the open. Let's take a look at the higher market cap stocks, see if we see a similar situation. So I'm using this market cap filter, going to market cap 20 billion or higher. So here I got 36 that made our percentage gainers list, 16 on the decliners. So from there, again, a little bit more bullish bias at the open. The lists aren't huge, so keep that in mind. Probably more of a mixed bag, but nevertheless, more on the bullish side than the bearish side. So let me know if questions start popping in, or if anybody's raising their hand. If not, I might just just start touching on notes on what people have been emailing me.
Yep, nothing's popped in yet, D.
Okay. Real quick, some things that, so a lot of times I get emails with questions that aren't really related to the website tools or data, but it's more of trading questions, like specific trading questions, which is something that, that's not what this website is, because we're not a broker dealer, we're not your broker. We don't keep your account. We don't know anything about it, and we don't, we don't do trading coaching. So these are some things that when you come to the website, it's assumed that you're already a trader. You kind of, you know what you want, and you're using tools and data and information to assist you to help make better trading decisions. So that's kind of like where we come in. So specific trading questions, it's really best, if a lot of times you could call your broker and they could help you out with that. And some things, either you're going to have to read books or learn from experience, but that's really not part of the website. But, in any case, like sometimes like people ask me, well, kind of what do you do in this situation, that, and everybody's situation is going to be, I guess what I'm getting at is a lot of these questions sometimes happen to be around how do you manage risk, how do you manage your portfolio? And that's not an easy question. There's no straight rule. that it's going to depend what your portfolio is, what your risk is, how much capital you have, what your outlooks are. And that is really, every individual case is different. That's why I say call your broker, and it's something as a trader you have to feel comfortable with managing yourself. Nobody can do that for you. And part of being a trader is that when you sign up to be a trader, you're signing up to really make your decisions for yourself. Okay. So there's no such thing as a trader who waits for somebody else to tell them what to do. Okay. It's kind of like you can't be a quarterback, but somebody else throws the ball for you. You can't be a doctor, but somebody else does the operation for you, because then you're a fake doctor, you're a fake quarterback. Trader is, you have to learn how to make decisions yourself, and that's going to come from experience. There's going to be lessons, sometimes painful lessons, and you have to be ready to accept that and do that. There's no such thing as fast and easy and no pain, no losses. That's not the case. So when I get those questions, it's sometimes when I tell them that, people get disappointed because they think it's there's a fast and easy track, or they could just sit in front of a screen and have somebody tell them what to do, and they log in, press a button, buy it or sell it. So they do the easy part, buy or sell, and it just works 100% of the time. That's not going to happen. You're really, if that's your opinion, that's how it should work, you're kind of fooling yourself. So you're kind of not being logical about it. Having said that, actually, what, 1 second. I did, before we started the show, I did forget to post it. Forgot to post the link to our website, so that might be why we're not getting those questions queued up. And it's important. I wanted to stress that, because if you get into trading with the wrong expectations, if you're getting into it with these expectations that are not realistic, you're going to be disappointed, and you're destined to fail. So having realistic expectations, it's much better to get into it than having unrealistic ones. Now, some people ask me, well, and this was over the weekend, I have a winning trade. How do I know when to get out? So I have, let's say, 6 call options. They doubled, they tripled. How do I know? Should I hold on to them? Should I get out? When should I get out? So, of course, there are a lot of factors that come into play here. There's no right answer to it, because each situation is different. But here's what somebody told me early on in my trading career. They said, if you're not sure if you should hold on, buy more, or take them off, there's no rule that if you have 6 contracts, you have to keep them all. Do something. Take half of them off, right? If you take half of them off, if it goes down, you're going to be glad you did something, because you didn't just ride all 6. And if you take half of them off and they went up, well, you didn't sell out of all of them. You still kept 3, right? Out of the 6. So if you're not sure, but you're thinking about it, it's better to do some of it than, there's no rule that says you have to do all of them, right? There's no rule that you have to take your entire position and decide, I need to get out of the whole thing here, or I keep the whole thing. So doing some of it over time is better than just not doing anything. Sometimes, people get out. I had a customer got really early in on the Tesla calls. He noticed people buying Tesla calls, bought the Tesla calls. They shot up, it was a huge winner. He got out of all of them. And Tesla kept going up. And so then he was asked, well, how do I know when to get out? Like, how do I know when it's the top to get out of all of them? Well, nobody knows that. It's a market, right? There's no way to predict that. But if you feel like well, it still has a lot of room to run, but I have a lot more risk because think of it at this point, if you bought calls for $1 and now they're worth $10, right? That's what they're worth now. Well, now you got more. Now you're holding on because those $10, that's where they're marked. Now you got 10 times as much risk, right? Because if it goes back down, not from your original, but now you're holding your account more risks. So do you want to reduce it? Or do you want to hold on to it? So he ended up selling all the calls, and he said if it didn't, it would have been, he actually would have had a much bigger, even double or whatever, triple the gain that he originally had. But the idea is you could take off some of your risk. If you have 6 calls, sell 5, keep 1, whatever it is. But there's no rule that says you have to do everything or nothing, right? That's not the rule. It's up to you to manage that and make those decisions. But you could always do a piece of it, half of it, some portion of it. So hopefully, that helps. Let me see. Any question? No questions coming in, Will?
No questions have popped up yet. And the link's out there. If anyone has a question, wants to come onto the Zoom meeting and ask it live, it's there. We did have Zachary made a point. He says, good morning. A lot of times when I'm in a trade and it starts feeling like it's about to turn or my thesis isn't right, a little voice in my head says, do you want to be able to play tomorrow? So everyone's got something that works for them. That's the deal.
Yeah, exactly. And you start really, when you start getting into the trade, I think and we talked about it last week. I'm sorry. You should think about risk first, right? Like, what is the risk I want to take here? How much am I comfortable? Because too many people, they don't even think about they know the risk exists, but they don't really think about it. They're like, I'll think about that later. I'll take care of it when it's going against me. No, you got to think about that before you even enter the trade, right? Even before you enter the trade, you got to think about your risk. And what do you think the max risk is? How much you're willing to do that? This all needs to be done prior to entering the trade. People are eager because they think they're going to miss out on reward. There's like this, mentality. I'm going to miss out. I'm going to miss out because you're looking at, all these execution systems, every one of them that you log into the broker are designed for you to do impulsive trading, right? That's what they're designed to do. There's no broker dealer that's created a order entry system to slow you down from trading and think about it. It's designed for you to make impulsive trade. That's why you're seeing
Well, some even more so now than previously.
Because
the whole model of Robinhood was built that way.
Their model is for you to do an impulsive trade because they're selling the order. They're relying on you to do a trade and put on positions and whatever. But so you're battling that. You have to like step away from it and really think. You gotta think like a trader because your execution system is just for you to enter in the order and put on the to execute the trade, and 99% of it is going to be the preparation and research. So you got to step away, really start thinking about why am I getting into this trade? What is my risk? What do I think the potential reward is? All this has to be thought through beforehand, right? So I really, my execution system, it's to the side. It's like I would only spend when I'm kind of ready to put the trade on, look at the markets, and it's like the least thing I look at. Maybe 1% of my day is like what I'm really looking at it. Most of the time, it's doing the research, looking at the markets, reading. Because some people ask me, well, let me just sit there and watch you do it. You would be bored because what you would be doing is sitting there and watching me reading articles and doing research and manipulating data. That's what you would be seeing, right? And it would be boring. And some, I think one person said, Dimitri, watching you, even this show is like watching paint dry, watching paint dry on the wall, because it's boring, because that's what happens. A trader, because all you're doing is mentally, you're trying to figure out what's going on in the market. How do I place, what is a future bet, if this is my outlook. And that's what you're doing. So it's not fun. It's not like watching a football game. Most of the time, it's trying to analyze and assess data. It's not like, I know, like sometimes you see people like looking at charts and doing these like, instinct impulsive trading, but that's not real. That's not, you're not going to see that in a real trading outfit. It's mostly, doing research.
Well, that's certainly not how Warren Buffett trades.
No, yeah, or no, no billionaire, no hedge fund manager. You wouldn't be able to do that. You'd have to have a thesis and what's behind this trade. So, if you find yourself looking at your execution system more than you're, doing research, analyzing data, trying to assess what's going on, it's probably not a good. You're probably doing it way too much, right? Because it's not going to be in front of you, in front of your execution platform.
Hey, D, we had a question pop up on the Zoom chat. I don't know if this person wants to come up on live. They didn't raise their hand. It's a newer chameleon. I haven't noticed him before. Izzy, he's asking, Dimitri, for long calls or long puts, can you please point me to where I can find the metrics for underlying break-even price or a percent move needed in underlying break-even per strike? For calls or puts. Jake actually looks like he answers him somewhere. It's a long drawn out. I don't know if you got anything from that.
Okay. But I guess like, I'm not sure where he's looking, but like, I'm just, again, sometimes it's better to come on the show and ask the question, because I'm not seeing what you're seeing. A lot of people ask questions assuming I'm looking.
Hey, Izzy, if you're on the Zoom already, if you're comfortable talking, just type into the chat, let me know, and I'll bring you on, because it's a big drawn out question. It'll come across much better and more understandable if you ask it live, potentially.
Right.
Okay. Izzy's good to talk. D, are you ready for me to bring him on?
Yeah.
All right, Izzy, you're going to be live. I'm allowing you to talk now. Here you go, Izzy. You're going to have to unmute. Thanks for joining, buddy.
Thank you. Good morning,
Izzy, how's it going?
Will and Dimitri, good to meet you guys. I love your show, love your website. It is just packed full of unbelievable data points. It's unbelievable what you could do and what I'm doing with this stuff. So my question is very simple, very simple. Normally, I'm not talking about spreads or anything like that. We'll start real simple, long call, long puts. I write code, all right? So when I use Thinkorswim. So what I did on my platform is I wrote two simple metrics. One of them is a column in the chain that tells me next to each strike, what is the break even of the underlying given that strike and the IV and all that stuff. The second column that I have is, besides what the break even point is, which is great to know, I want to know what percentage of move is needed in the underlying at that strike to break even. So basically it's the same info, but in a different way.
Oh, okay. So the way, and you're doing this on an options chain?
Yeah, I just wrote a simple code. It's 2 lines, 3 lines of code. You get the break even. Yeah, to get the break even, it's very simple. You take the strike and you add the ask or the or the bid or whatever you want to do, and there's going to be your break even. But you understand, right? Yeah,
I understand. But again, then you have to choose which one, right? The ask or the bid or the midpoint, right?
No, I just said that you could take either one, but I use the ask. In the formula, I use the ask. The other column is what percent move does the underlying need to go if you're choosing that strike? Is it a 1% move, 5% move, 6%? And for me, that's how I get really good wins on my trades, because I see, given the strike price and the delta, the smallest percentage move for me to get into break even naturally is going to be the one that's the best one, because I don't have to wait for a 7% move in the underlying to break even. I need to wait for a 0.75% move, and we're there.
But that will be then, but then you'll be doing more deep in the monies, right?
Yeah. I tend to stay at the money and more in the money, not out of the money. That's
right. So the only thing in that situation, you're just buying higher priced options. But if we're talking about, just so I'm looking at the options chain right now, and what you're saying is, okay, if this strike is 150, if the ask is 199, my break even is $151.99. You're saying
right,
that's
but that column is showing me 2%, whatever the percentage is distance from spot, but that's not really giving you the info as time goes on and you're at a certain strike. What percentage initially do you need to break even? So, I mean, I guess it's almost the same thing, because spot is always going to be the price at the moment. But if you're choosing a higher, if you're choosing a more, well, I guess if you're choosing a lower strike, in other words, a more in the money strike, then that always stays the same, and the percentage is different per strike, not at the spot. You understand? You're looking for the difference at the strike that you chose.
So just so I'm kind of understanding where you're going, you're looking, to me, it seems to me that you're trying to see, if I have all these in the money calls, which one on a relative basis is the cheaper one. It has to go up less.
Exactly. Which one has to work the least? Which one needs to travel the least to get into the money?
Okay.
Or to break even, not in the money. To break even, that will be the line, and anything above that naturally is profitable. But at a quick glance, maybe I could show you a screenshot, maybe not now, a screenshot of my columns in Thinkorswim, and then you'll say, "Oh yeah, look how easy it is." You just
maybe if you give me a visual, it'll help out. Sometimes when I say visual,
Dimitri, you're getting some feedback. It's a little.
Right. So being that we're on everybody's time, and not everybody is interested in this question, I respect everybody that's on this website. Maybe I could just send this to you in a screenshot, to support at, and then you'll pick it up. I'll put on at, to Dimitri, and we could carry it on.
Yeah. If you do that would be helpful. Then I kind of see, like, okay, this is what you're trying to do.
Hey, D, your sound is still. You got to adjust your mic or log out and come back in.
Okay, so Dimitri, I will do that, and I'll talk to you later. Thanks for giving me the opportunity to come online. Thank you so much.
Thanks, Izzy. Watch out for that email. Support at MarketChameleon.com, Izzy. Appreciate it.
Thank you.
Thank you. Willie, then you're saying you can't hear me well?
Yeah, you're all, you've gone underwater.
All right, let me log out and log back in.
All right, perfect.
Yep.
All right. Well, that was awesome, Izzy. Thank you so much for popping in the first time, Izzy. Always a big deal. All right. Mike, actually not Mike, Rob, you never, what was your idea for the humidor? Not to get off Izzy's break even. There's D. You back, D? Here he comes. All right, here you go, D.
Okay. So it was a good question. I'll wait for the, for that email snapshot. It'll give me a better idea if I could see, exactly kind of a picture of what Izzy is doing, and we'll see if that's something that we could help out with. But any other questions? Well,
Rob actually had a question about, it was a quick question about when a company IPOs. We've had a lot in the chat. Let me get up to it. He says, maybe it's not a silly question, but as I understand it, after a offering to the public, the company gets the money from the IPO, and then the shares are exchanged among shareholders unless the company buys back the stock. He's asking, I guess, if that's true. I mean, I know you're not an expert in the IPO process, but I guess he's looking into the IPO process.
Well, yeah, that's how the companies raise money, right? They sell shares. They sell shares in the company for represents, you know, a portion of whatever the shares you own represents a portion ownership of that company. And when they IPO, they collect that money and then they use it for business purposes, right? So that's kind of how it works.
And a lot of times they're not issuing all the, some of the shares are held back in the bank for further release, and some are owned by.
Yeah, they'll sell a portion of the company,
yeah.
Out, and they'll tell you that and there's a prospectus, right? So the SEC creates rules that you issue before you issue your shares. You have a prospectus, what your company does, what you intend to do with the proceeds. It's going to tell you financial disclosures. So when you go to the SEC website before a company goes public, they have requirements, right? They issue a prospectus, so you could go and read it. You could go read the old prospectus. You could go onto the SEC website, and if you want to read Facebook's original prospectus, you could do that, or Twitter's, whatever it is. It should all be down archived. But every company before they go IPO, they have, and after they IPO, they have reporting requirements, right? So once you go public, then you have financial disclosure.
Yeah, we haven't done it. Could you just go through a company how you get those SEC filings? And we haven't shown that in a while.
Yeah, so if you like here, I'm on Apple, so I'm going to go to links, and here SEC filings. So if I go to SEC, it'll take me to the SEC filings, and then this is Edgar, and then you could start looking up, all the website's a little bit slow right now, but that's where you go and get those SEC filings on the SEC website. So
Great.
I'm not sure what's going on with there.
Well, like anything with the technology, it could be an issue you may need to look at, or it could be their site. So
exactly. So there you go. You did your 8K filings, 10K, ownership disclosures, all this. These are all on the SEC website.
Yeah, and one thing with the new IPOs, which is different with these SPACs, but your classic IPOs, the big internal owners, the founders, the CEOs, investors had a lockup period too. And that was always something that options traders thought about and were aware of, because, debatably, there could be some pressure on the market when that lockup ends.
Right, exactly. So what Will's talking about is, some people who either work for the company or managers or, the CEO, they cannot sell their shares right away. They'll have a lockup period. And so when they go public, they can't just go and dump their shares right away. So, the shares will start trading, and then at some point they could start selling their shares as well. So it gives some time for the markets to trade.
Awesome.
Yep. So if that's it, we're right up at 9:28.
Yeah, I have to apologize. I clicked, turns out Izzy popped into the YouTube chat. Izzy, I apologize. I must have clicked the wrong box when Dee was leaving and removed you from Zoom. It was not intentional. I apologize about that. You can, anytime, if you get off of Zoom, you can click the link and get back in. Anyways, there you go. Thanks for joining, everyone. Dima, great job. Special thanks to Izzy. Remember, Izzy, you can send the email with the screenshot to support@MarketChameleon.com. And everyone, so appreciative of you coming on today. Thanks, Dee.
Yep. Thanks, everyone. Stay safe out there. Have a good trading day, and hope to see you guys tomorrow.
Trade in peace, chameleons. Bye.